Is this a cup and handle? Technically, yes, but I'm going to paraphrase something Jordan and I talked about at the Daily Gold. This is more bullish than a regular cup and handle. Why?
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's morning rundown, we're going to talk about gold's breakout in technical terms, a little perspective after the market has had such a large move. Before that, we'll recap the top market news so far this morning. Let's take a quick look at the markets. The dollar is up 8 at 103.92. Bond yields are slightly lower after a weak day yesterday at 418.6. The S&P is down 11 handles, 51.15. The VIX is 13.79. Gold is up 8 and change, was up about 11 and change. Silver is trading 23.91. Gold trading 21.22, 21.23, 21.24. No, not yet. WTI is down 67 cents at 78.23. Natural gas is down 3 cents. Bitcoin is down 1.75%. That's 67,100 and change. And Ethereum is up, up 3.5%. Or I guess this is what alt season looks like. Grains are all down. Okay. What are we going to do now? What are we going to do? I guess what are we going to do about the markets, right? Okay, here's yesterday's stories. There were more than this, but markets poised. That's yesterday's broadcast, which hopefully predicted is not the right word, hopefully prepared you for the action yesterday. There's the charts at the end of the day, a little bit of eye candy for all of us. And during the day, early in the day, we didn't get to it until a little bit after 10 a.m., but we sent out something to Premium that I think was very helpful in getting perspective on what's going on. It was helpful for us, let's put it that way. So today's quote from a Premium subscriber: as long as stocks keep going up, the mainstream media can blithely ignore gold's rally. But when stocks crash and gold does not, then you have a problem. Yeah. All right, so what do we have today? Today we're going to talk about some technical levels. I'll include those in Premium as well, and Premium will also have a nice report from T.S. Lombard, Dario Perkins, about economists. He's putting a finer point on something we felt for a long time. All right, before we get into the technicals, right? That'll be fun. U.S. equities retreated on Monday ahead of Fed Chair Powell's congressional testimony on Wednesday and Thursday, and gold rallied during that same time frame. Notable headlines: Beijing is expected to resist growing market pressure for a much stronger stimulus to spur China's economic recovery at its flagship annual political event this week, as President Xi Jinping focused on turning the country into an advanced manufacturing superpower. That's not important today. What that is important is it shows that there's a war between the West and the East, specifically the US and China, and that war centers on the concept of, believe it or not, mercantilism. In a mercantilist economy, the world is changing into a mercantilist type of economy. You just simply need to export more than you import. And China no longer wants to sell little plastic gadgets. I'm simplifying. They want to sell upscale, complex products. They don't want to sell, shoelaces. They want to sell solar panels. And their economy has been gearing towards becoming a major exporting economy of value-added goods. The U.S., the West, and the U.S. in particular want China to grow by becoming a consumer economy. So they want the Chinese to make stuff and sell it to themselves, right? They think that they need to grow their own domestic demand. And that's something that we have been saying to them for years, hopefully that they would do that to kind of take that mantle from us. But they have not done that. And they have not done that because their value system has re-embraced a much more conservative way of things. Hey, they're not going to be conspicuous consumers. That's their stand right now. Now, when you tie that into mercantilism, okay, when we tell them we want them to just buy more stuff, That's mercantilism. We want to sell that stuff to them. Okay. So every major power in the world, and I'm speaking specifically about the US and China, these two nations want to become the world exporters. It's all about selling more than you buy now. That means making more than you eat. That means saving. Anyway, not important today, but that's the ideological split right now. It's we want them to buy, they want us to buy. Not necessarily us. They want to sell stuff to the rest of the BRICS world. All right. JetBlue Airways and Spirit Airlines terminated their merger agreement weeks after a judge ruled that the $3.8 billion deal would reduce competition and harm cost-conscious flyers. Apple on Monday announced a new version of its 13 and 15-inch MacBook Air laptops with its latest M3 chip. That's probably significant. I don't think the demand is going to be huge, but what do I know? New York Community Bank Corp tumbled for a second straight day after a pair of rating downgrades threatened to boost the beleaguered bank's borrowing costs. Shares of the company fell as much as 17%, trading at the lowest level since 1996 after plunging 26% on Friday. Comment about that with regards to gold. That might be one of the drivers. There's multiple drivers behind gold and Bitcoin and everything that's a hedge against dollar risk going up. And that might be one of them. People may be saying, oh, here we go again, banking crisis again. I think it's just something to be careful of because the banking crisis, on one hand, we've seen this before and we know how they'll handle it. On the other hand, maybe there's something bigger. New York Bancorp may be the surface of the water, and there may be something deeper commercial real estate wise. Anyway, geopolitics. China's Coast Guard took control measures against Philippine vessels that illegally intruded into waters adjacent to the second Thomas Shoal, according to state media. That's the next area where we're going to have problems. Hamas said in a message that they will be flexible on the issue of the number of prisoners if Israel is flexible on the issue of returning Palestinians to northern Gaza. Okay, so hostage negotiation. That's what's going on right now. Today we have ISM services at 10 a.m. Should be very significant, although I don't know. I don't have handy what to expect. Today we're going to talk about the cup and handle revisited. So let's get to that. First, let's do a quick preview of someone else's levels. All right. In the premium section, I have a report from GTA, and they're an institutional firm, and I've brought them up before. And GTA is a type of firm that if you're a macro discretionary fund, you look at their levels to trade. So helpful or not, here's their levels. Now, as far as gold is concerned, the long-term trend is now in a moderately favorable position as bullion moved up sharply in the past week and finally closed that 2085 resistance level basis April that we spoke about last time and which was said would, quote, improve the long-term outlook, end quote. This, I think, is a little bit more in depth. For the gold bugs index, the HUI, however, there's more to it. However, while the major trend is still bearish, the near-term pattern has now improved to a neutral rating as this index recently completed a double bottom formation, and a close now above 212 would turn the trading trend positive, but with a heavy supply overhead in the 2020 to 2023 area. We wouldn't expect an A-plus rally at this point, and we still strongly favor the bullion over the gold stocks. Again, that's technical. There's also some insights from Dario Perkins. I want to read this, and then we'll go to the charts. Central banks have a simple narrative for the inflation fiasco of the 70s. It's a subset of inflation is always and everywhere a monetary phenomenon. They blame the episode on mistakes, especially central banks keeping real rates low and cutting too soon. Cynically, this narrative has allowed policymakers to take credit for everything that has happened since, including the Great Moderation. But the thesis is riddled with inconsistencies, and that has implications for worries about a second wave today. Correct. Correlations are not causations. An economist will frequently grasp, but he doesn't need me to tell him he's correct, but he's saying with a finer point what I've been saying for, I don't know, the last 6 months. Economists will frequently grasp at correlations to explain what has happened when they make errors because they're trying to figure it out. They are, after all, human. And faced with staring into their own personal abyss, they seek explanations for things they do not understand. The problem is they are also subject to echo chambers and groupthink. That too we're all subject to. But what they are guilty of, and this I feel strongly about, is that it is not forgivable that they hold their conclusions out to be definitive, not contingent. They accept the praise heaped on them without an ounce of humility, and in doing so mislead the rest of the world that their work is scientific, when it is not. It is sociology. They abuse the public trust, and in combination with the media that enables this, for the sake of advertising revenues, have dumbed down the population and things that matter most for our economic well-being. But gold, Bitcoin, markets like that are telling you that you've got to smarten up. That's it. Let's get to the main event, right? I know I'm supposed to do that a little bit earlier, but I wanted to get this other stuff out of the way. You have to. All right. Chart number one. Is this a cup and handle? I almost said cup and shoulders. And the answer is no, it's not. This is a cup. That's the handle. A cup is supposed to be symmetrical. It doesn't have to be symmetrical, but it's supposed to be symmetrical. Is this a cup and handle? Technically, yes, but I'm going to paraphrase something Jordan and I talked about at the Daily Gold. This is more bullish than a regular cup and handle. Why? Because the right lip is higher than the left lip. This is more bullish. Now, I'm not saying this for the first time, pumping you up. I've said this before. He said this before. If you're looking at this as a bullish formation, it's more bullish than a regular cup and handle. How high should it go? Well, people talk about the depth of this, adding that to the top of the lip. I don't know. It's debatable, but I want you to understand that this is the real deal. We're in it right now, and this market should get volatile and should keep going higher. Now, I'm going to give you some levels that I'm going to use because we are in an area, we're in rarefied air. There's really not a lot of levels to look at. And the first thing I want to say to you, if you're looking for levels, all numbers are levels. Sounds very simplistic, but it's true. The numbers that matter are the numbers you use and the numbers that other people look at if you're trading against them. So the first thing I want to draw your attention to is when the market makes a new high like this, or almost a new high, certainly a new high close, you want to have something big picture to focus on. And the big picture thing to focus on for me, just to give me a reference point, is something called Gann speed lines or Gann fans or whatever you call it. I don't swear by this stuff. But you see the two red lines there? That's the gold range now. Meaning if it holds the bottom red line, which it did down here, then it should touch the top red line. That's your first target, 2,300, right? Depending on if we get there here or get there. So it's going to travel from one line to the other. It's kind of like a ping pong thing. Now, I didn't draw all these lines. I only drew these two lines, and the rest match up quite well, actually. Next, let's get to the actual charts itself so you can see what I'm talking about. Here we go. Over the last 4 or 5 days, just to give you a walk back for a second, we identified buying in here, right? We identified buying in here, and now the market, this is the April contract. We had 2055 as a level. That number came from GTA, and then we had 2088 as a level that came from ourselves, and those numbers held. So I want you to look at those two levels here. We're above that now, right? And this line really means nothing in terms of our daily analysis. We're out of this channel. That channel means nothing. All right. Now I'm going to give you a couple levels that really on the short term don't matter that much, but there's something to look at. These two levels matter, okay? But I'm going to drop this now. I'm going to drop this 89 down to here. Why? Because there are people that are going to buy this down to here, and then there are people going to catch dips down to here. As long as it doesn't break into this, we're okay. I'm going to take this level, and I'm going to drop this down to here. Why? Because there are people that are going to try and catch this knife if it comes down here, and that'll be important too. So now we're in the 2045. Let's call it 2050. We're in the 2050 area now from 2055. So that's the area you need to just add a little bit of volatility to it. On the upside, 2110 is an area that it should have paused at, but it didn't. So it paused at 2120. And that's what we're focused on now. 2120 is an area. If you're short-term trading, you care about 2020, 2120. Oh boy, 2100. I'm not used to that handle. So those are the levels. Admittedly, not really, perfect levels, but I'll say this: we have, new all-time high closes. Right? We have a market that's testing a wick that was otherwise previously forbidden to go into. I think that this buying that came in here, we'll go back to the regular gold chart so you can see what I'm talking about. All right, see this buying here and here and here, this order. I think that order's filled. And now you have the macro funds coming in, and the open interest would confirm what I'm saying to be true. The question is, what happens when Powell talks? Are these people getting in because they think Powell's going to talk and something more bullish will come out? If they are, then we're really susceptible to downside. Or are these people getting in because there's an announcement beyond interest rates or some sort of announcement that's going to come in that's we're worried about inflation, but we have to let it go? No, that remains to be seen. I do, however, think that this was a sovereign fund that bought and possibly a central bank that was buying ahead of some event. Could be some event coming up. I believe it's related to Bitcoin. I don't think that's an accident. It's all tied together. Anyway, I'm Vince. Oh, let's touch on silver for a second. Silver. 2310, 2320, yes, right? What did I say? What happened yesterday? If we got above this area, I said we'd skate. Remember, we skated down, we skated up. We skated down, we skated up, right? This is a patch of thin ice. The question is this going to be thin ice? And I don't think it is, because all this stuff there, somebody really hated it and wanted to sell it there. So expect a pause between 2440 and 2460 if the market's going to continue higher. If it gets above that, you could see another skate higher. Okay, so silver is not going to catch up until they're done buying gold. It's really kind of bizarre. Historically, silver will lead gold on the micro, on the tactical, because it's a smaller contract and it can move faster. But in the big picture, central banks are buying gold and not buying silver. When will people buy silver? When they're done buying gold. Okay, sovereign funds are going to pile into silver, I think, if they aren't already. Anyway, I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week 1 ounce silver Canadian maple leaves from the Royal Canadian Mint are only $3.39 over spot. The silver maple leaves are one of the most popular silver products and also come from one of the major sovereign mints. To get yours, call Miles Franklin at 833-326-4653, where you'll have your own dedicated broker who will be happy to answer any questions you have for any of your precious metals buying or selling needs. So call Miles Franklin at 833-326-4653. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions. And thanks for watching.